Hello there. Welcome back to Cost and Management Accounting and 5, still working on the present paper of November 2023. So we are going to make a continuation on the preparation of income statement. Remember, in the last video, we prepared uh, the the production cost statement, and you got what you got on the production cost statement. So if we are going now to prepare the income statement. So if you go down the question, you'd see that we have got two requirements that were there in terms of preparation of production cost statement for the end of 2020 and compare the income statement for the end of 2020. So we are going to prepare second part, which is the income statement. But remember, there are figures that we are going to take from production cost statement that we are going to use in the income statement. So we are just going to set those figures. Remember, for the finished goods, according to part A, which is part 5.1, finished goods, which is cost of production of finished goods. Let's just say our cost of production of finished goods, our cost of production of finished goods. We found it as 791,200. So this is what we have. And then for over recovery, we found an over recovery there in the production cost statement, and the over recovery was 393,500. So 393,500. So basically, we are going to use these two figures in the preparation of the income statement. So in the income statement, remember, we are going to start with the figure for sales. We're going to start with the figure for sales. So before we start, we can just maybe refer back to the production cost statement that we prepared. This was our cost of production of finished goods. And if you check our over recovery, we can just go back to check. Our over recovery was 393,500, which is a little bit faint there, 393,500. So this is the two figures that we are going to use. So I will go back to our person to check the figure that we have for sales. This is the figure that we are going to use. So if you go up there, you see that the figure for sales we are giving it here. This is the figure for sales that we have, which is 849,000. So we are just going to put it as such as 849,000. So we can go to our answer section. So you see that this is our income statement of two gate manufacturers on 31 December 2021. So we are going to start with the figure for sales. And the figure for sales that we have there is 849,000. Straight away, I will go to the section of less cost of sales. Then on cost of sales, obviously, we are going to start with the open stock of finished goods. So we are just going to say stock of finished goods. That is the beginning of the period, which is 1 December 2021 in brackets. And then we can just go and check that figure. So you see that we have it at the beginning. Then go there and check. Right, out goods, we have got 50,050. So we're going to pick up 50,050. So we go back there. And say our 50,050 for our stock of finished goods, 1 December 2021. So we are saying 50,050. And then after that, we are supposed to remember, if it's a trading account, we are supposed to have purchases here. But this is not a trading account, it's a manufacturing business. So in manufacturing business, we are going to replace the figure for purchases that we put in a trading account and put our cost of production. So here we add cost of production. And this is the figure that we got in the last production cost statement, cost of production. Let's just check that figure. This is the figure that we have, 791,200. So we can go back there, put our 791,200. You're saying 791,200. Then from there, having put our cost of production, we can now then adjust for over recovery. And then the over recovery, we are supposed to subtract it here. So we can check that figure again in the production cost statement. We have it there. Then we can go to refer back there in terms of what we found in terms of overcovered. We've got 393,500, which we are going to put there. So we go back. We have got now an overcovered. So we are saying overcovered. This is an overcover of manufacturing overheads. And the figure that we got there is, let's try to see, figure for overheads, over recovery. We got 393,500. So we're going to say 393,500. Remember, we're subtracting it. So here you can just indicate as less over recovery. If it's an under recovery, we are supposed to add it. So this is what we have. And then we can as well try to go to the next one, which is now, if you calculate here, we are going to get finished goods. Finished goods available for sale. And then we are going to say, we are going to start from 50,050, then 8,700, 700, 1,200, subtract 393,500. And then the figure that we are going to get there is 447,750. This is the finished goods available for sale. And then finally, we are supposed to subtract our stock, our finished goods at the end. This is our closing. It is on 31 December now, 2021. So we can just refer back to see which figure do we have in terms of that one. We go to additional information. See that we have it here. Finished goods 23,500. So this is the figure that we're going to put there. So we are now going to say 23,500. And then remember, this is here we are saying again less. We're subtracting, so we subtract. And then the figure that we are going to get now is now representing the cost of sales. So we are saying 447,750 and 23,500. And then the figure that we get is now the cost of sales. So the answer, we're going to put it here, representing our cost of sales. So we are saying after subtracting, we're supposed to get 424,250. But remember, we're saying less, so we're subtracting. So to get our gross profit, we're saying 849,000 minus 424,250. Then we go down to put that figure to represent our gross profit. Which is here, which is we are going to get our let's try to see for our gross profits. Let's try to calculate there so that we see what we get in terms of our gross profits. So our gross profit now becomes 424,750. And then obviously we go to now to less expenses. Then we can check our expenses according to the question. So for expenses, if you come here, right, we have got advertising cost 4,400. So we can put that one, 4,400 is our advertising cost. So we are saying advertising 4,400. And obviously we are going to check other expenses. Right, if you come here, you see that we have got other expenses that are given as proportions there. We have this one, factor rent. What we are going to do is remember the factor rent that we are given, this one, 66,000 represents factor rent. So 66,000 is equal to Remember, the 40% is administration, which means 100 minus 40, you get your 60. So 60% is your factor. So it means 60% is representing 66,000. So the one that we are looking for is now 40% for administration, which is supposed to go to income statement and other less expenses. So we can just use proportion there by saying 40, what we don't have over what we have, and then we multiply by the given figure. And then if you do that, there, you are going to get your answer is this our factor rent is 44,000. So here we have 44,000 representing our factory, rent. So we also have electricity. For electricity is a sequence that again we are going to say the factory electricity figure is here, which is 54,500, which is represented by 20% factor. So factory is this one. So we are saying 20% is equal to 54,500. So 100 minus 20, you get 80. So 80% is for the administration, which is 80% is one that we are looking for. So we are now going to say 8 over 20 times 54,500 over 1. And then the answer that you are supposed to get there is 218,000. So we can just go there and summarize that on the working part. So here now we are saying we have got factor rent. So in brackets, we are saying it's 40 over 60, and then we multiply by 66,000 over 1. And then the answer that you are supposed to get is 44,000. Remember, this is 4,400, this is 44,000. Then we go to factor electricity. We are going to summarize it as 80 over 20. And then we multiply by 54,500 over 1. And then the answer that we are supposed to get here for factor electricity is 218,000. So simple that 84,400 plus 44,000 plus 218,000. The total that you are going to get here is 266,400. And we are saying less, so we're subtracting. So we say 424,750 minus 266,400. Then we get our net profit. Remember, it's net profit when gross profit is greater than expenses. Like in this case, if gross profit is less than the expenses, it's going to be our net loss here. So here we subtract the figure that we get is 158,350. So this is what we have, guys, in terms of the fraction of this income statement. Those who have subscribed, please subscribe and share. We are still coming to more videos as we prepare for exams. Thanks for this video. I'm signing out. So meet again in the next video.